Welcome. This is the event to be at everywhere you want to be with Visa. My name is Anela Morrison, and I'm your anchor for this panel discussion. And we're talking about inclusion. We're talking about fintech solutions that are going to change the financial services sector for Africa. I have a number of panelists joining me today, and I'd love for them to talk a little bit about what they're passionate about, why they're here today, and let's start off with you.
So I've been at Visa for 8 years, and what I'm passionate about is in Africa there is so much opportunity, and I think collaborating together with fintechs, we can really solve with impactful solutions for communities and financial inclusions across sub-Saharan Africa. And I'm really excited about the Visa Everywhere initiative because it creates that platform for us to actually collaborate.
I'm Blake Player. I'm the head of growth at Vala. Vala is the largest digital assets exchange that's headquartered in Africa. We are essentially a digital assets exchange and marketplace where buyers and sellers come together to exchange assets like Bitcoin, Ethereum, and virtually any other asset that can run on a blockchain. What we do is really create a bridge between financial worlds at the moment, the traditional financial world where Visa and the banks and the fiat world and the new financial rails that we're part of building in the blockchain and crypto space. And we allow these two worlds to talk to each other and for value to be translated across them. What I'm passionate about, I really do believe that if you change money, you change the world. Money is a part of everything that we do. It's the incentive mechanism that drives the world, that drives politics, that drives behavior. And if you make money better, you make the world better. So I'm working really hard to try and make the new financial world a better place and one that works for everyone.
My name is Wiza Jalakasi. I'm Director for Market Development in Africa at eBanks. We're a Brazilian headquartered payments processor. We help some of the biggest companies in the world collect money via local payment methods in 18 countries in the global south, soon to be 25 by the end of the year. I'm a career techie. I learned to code before I could talk to girls. So I've got a very tenured history in that space, very passionate about the possibilities and the opportunities. And really excited to be sharing the stage with you all.
Hi, everybody. My name is Nadia Musaji. I'm the co-founder at WUMHub. I'm an engineer turned entrepreneur turned investor. WUMHub does 4 things. One is we've been building talent for the engineering and tech industry for the last 18 years across 30 countries through WUMEng, Women in Engineering, which is a passion of mine around how do we really move the needle around diversity, equity, and inclusion with a mission to empower 1 million girls through STEM education around the world. The second thing is we run incubators and accelerators to support female founders in STEM businesses, so science, tech, engineering, mining, and manufacturing. The third is we build co-working and innovation spaces that are female-focused. We've got the first 2 in South Africa, and we are building out across the continent. And the last thing is a 535 Ventures, which is a $30 million VC fund investing in pre-seed and seed women in tech businesses across the African continent. And through WUMHub and 535 Ventures, at the incubator and our venture capital side, we run 9 different incubators to support women in STEM businesses. And we are probably the largest capital mover in this space, an ecosystem builder for women in STEM businesses across the continent. We've worked in 30 countries, and this is what gets me up at night, is to be able to really support women, because when we support women, we're able to move mountains. And so for me, that's our vision, our mission is to create a more diverse and inclusive ecosystem.
Thank you so much.
Hello, everyone. My name is Keith Sabilika.
Keith, sorry, if you could hold your mic up close so we can hear you.
Can you hear me now?
Yes, we can.
All right, now, awesome. So my name is Keith Sabilika. I'm a senior fintech specialist at the Financial Sector Conduct Authority. I think many of you may know that FSCA is the conduct regulator in the financial system in South Africa. I think my passion for being here or for doing this job is just to work with fintechs, help them, assist them in terms of navigating the regulatory landscape. We all know how complex that environment is. So what makes me wake up every night, every morning, is just to be able to work with fintechs and help them assess that regulatory environment. Thank you.
Vinesh, I'm going to start off with you. And I think that as Visa is a large institution that's been around for many years, it's a big system, right? Where is the edge of change required for Visa to take into account the importance of taking everybody with us in this transformation that is speared by technology, that is speared really by the fact that we stand to lose the world if everybody is not able to protect themselves. If we don't have a sustainable ecosystem, we're in trouble. So where's the edge of products and solutions that Visa's keeping an eye on that's going to help us secure tomorrow?
Thanks, Anela. That's a long question, and will take me a couple of days to answer, but I'll try and do it in a couple of seconds. At Visa, building payments ecosystems at scale is what Visa does best. And then working with ecosystem players is also what we would like to do and continue to collaborate on. And the reason for that is that we understand, or Visa understands, that you can't build this alone. And then the second part of that is interoperability. You've got to build interoperability in the payments ecosystem, because systems and platforms that communicate together create the most impactful solutions. And secondly, collaboration, and we see this time and again, is that collaboration between partners and fintechs is what builds the most impactful solutions. It's not somebody in isolation sitting somewhere alone. That's what builds it. When you come back to interoperability, and if you look at the ecosystem, and if you look at the players inside there, it requires collaboration on standard protocols. It requires open APIs. It requires collaboration around frameworks. And once you have that, then you start to build an ecosystem. Okay? So all of the players need to have that interoperability. So what we're looking for when we look at solutions is that we want to make sure that you're solving a real problem and not creating a problem after the solution. You need to ensure that you have really great user experience, because people have really short attention spans, and you need to grab that attention. It needs to be really frictionless, and it needs to be able to scale and scale very quickly. And lastly, and I know you said us to be serious, but you got to see passion in fintech's eyes. When they're solving for something, there's no passion, this thing is not going to work. Okay, so that's what we need to see. And then from the ecosystem, once you create that ecosystem, you need to make sure it's safe and secure, because once the trust is broken on the consumer side, that person is gone. You're not going to see them. They revert back to cash, and that's what happens. Now, Visa processes 73,000 transactions per second. That feeds into AI models that score transactions, produce that score, and fintechs, banks can then use that score to make really smart decisions about authorizing that transaction, allowing it to go through, making sure that is the right actual card holder or credential holder that's actually making that transaction. Okay, so all of those things need to happen. Then we start to bring technology into the ecosystem. And most of you, in South Africa specifically, there's Apple Pay, there's Google, there's Samsung. All of those wallets are tokenized. Okay, so what that means is there's no actual PAN or card number in the wallet. It's a token. Okay, so that makes it safe and secure. Okay, so those are the technologies that we're constantly innovating and bringing into the ecosystems to make sure that when the ecosystem gets built, it's safe, it's secure, and consumers trust it. Because once there's a Visa stamp on it, it's trustable. The merchants know they will get paid. Banks will know it'll be settled, and the consumer can take their goods and walk away from that shop or merchant.
Thank you so much. Thank you, Vinesh. Blake, I'll come through to you. As a person who's responsible to oversee growth, right? And we talk a lot about it's a growing continent, so much opportunity. What is the pace with which we approaching that growth? How fast are we going? Are we going fast enough? Are we going as fast as we can? What can help us do better? Wiza, please, can you share the microphone?
Thanks. So I think even in any market, there's pockets of growth, particularly in the crypto market. The last 8 months or so haven't been particularly fast, but even within that, we're seeing growth. I mean, we're adding 10,000 customers a month still, and prior to the previous sort of market cycle coming down, we were growing at more than 30% per month in terms of trading volume. And still, every week we're onboarding, many businesses who are looking to get involved in using crypto in their business. And we're seeing growth everywhere. It's not necessarily all about trading volume. It's also about growth in how the ecosystem develops. So, for instance, in the last 6 months, the amount of regulatory environments that have been clarified in our space has been tremendous. Europe's MiCA regulation has come into play. The US is coming to a spearhead. It's been quiet for a long time. Dubai, the UAE, the Middle East has all been coming to fruition and creating clear regulatory environments. Even in South Africa, our own FSCA has started the licensing process. So there's a lot that's been happening, and there's tremendous growth in the technology that we're seeing. So, and a lot of that is actually coming out of African startups and African businesses like Valor. So I'm seeing a lot of growth. You just need to know where to look.
And you took the words right out of my mouth. Women in the sector, but not just women in the sector, but ensuring that there's a lens that sees women and is able to build into their technology the nuances that attract women to get into the space and to use some of the technology that's available. Expand for me, what is that? What is that language that needs to be visible when we want to ensure that women are included?
And for me, this is the ever frustrating piece, because I sit as an entrepreneur, I sit as an investor, I sit as a consumer, right? And as consumers, women actually control 80% of the household purchasing power. And what we're seeing is shifting consumer behavior, specifically around women, is that before we were only making decisions around what needs to be in a household. Now we're making decisions on big ticket items like vehicles, technology, laptops, cell phones, and that, which generally used to be something the men did, but now it's completely moving away. But what we sometimes fundamentally miss is what women need as consumers, right? And so what we need more is, and what we're seeing is kind of femtech coming along and seeing smart women that are able to kind of capture that market and that purchasing power. But for me, it's a double-edged sword, because if I think about in 2021, only 2% of all VC dollars went into female founder teams on the African continent, right? The fact that 535 Ventures is the most active venture capital fund investing in pre-seed and seed women in tech across the African continent. We're a $30 million fund. We've done a first close, and we've only invested less than $2 million, and we're still fundraising. And that makes us, with our 18 deals in 9 countries, the most active investor in female founders. For me, the system is broken, right? Because that means we can't get that femtech innovation out of the starting gates, because tech is expensive to build. And if we don't have the investors, and especially at an early stage, you're backing the jockey and not the horse, right? You're backing the founder. And when we don't have the money moving into spaces, because founders look different to you, sound different to you, have different needs like bra straps and microphones, and everybody else is going, that was never a problem. But trust me, I'm so conscious of the dresses that I wear to every one of these events, because I'm just like, I don't want some guy putting his hand down my back to put on a mic, right? Because I've done this before. But most of the guys, they were just like, no, I don't understand what that means, right? Wear pockets. I promise you, people who can design dresses with pockets, that's where I'm going to put my money in, right? So you guys have no idea how lucky you are here with your pockets. And so for me, but we can't get that innovation out of the starting gates because we don't have the financial flows to go into it, right? And then how do we start to rethink the entire system to go, there's really cool innovators coming online. We need to be able to actually, at pre-seed and even early at an angel, write those kinds of checks and get women not just to become consumers, but also to become creators of really great solutions, and then back them to be able to scale it for success. If I look at today's pitches, we've had one female founder pitching. And for me, the system seems to be, and she's really early compared to everybody else, which is incredible, and I love the fact that she's on this playing field. But where are the others, right? And the others, the innovations are dying out because they just don't have the capital to get it out of the starting blocks.
And it's tiring to have the same conversation for so many years. I mean, we're hearing the same thing all the time. But what are the ways to break that? And I'll come back and I'll hold you all three accountable when I come for the second round. But when we speak to, for example, the regulatory environment, it's a way of thinking, right? Regulation used to be one way of thinking. I'm guessing that it's had to pivot a little bit towards not just being a gatekeeper, but to also being an enabler. Am I making the right assumption?
Yes, definitely. I think you are making the right assumption. I think gone are the days when regulators used to come up with regulation and expect the sector to just comply. What we are seeing these days, especially in this fintech space, we're seeing regulators around Sub-Sahara, coming together, collaborating, coming home here in South Africa. Regulators, actually the main financial sector regulators, they formed what we call the Intergovernmental Fintech Working Group, which is a collaboration of all the key financial sector regulators. What they aim to do there is to help fintechs, support them with regulatory guidance. We know how complex the regulatory environment is. Just to give you the work insight in terms of the work that has been done on that front, ever since it was formed, I think about 3 years ago, they have engaged with over 180 fintechs, 2/3 of which are startups or non-operational. What they're aiming to do, what they have done there is just to provide guidance, steer them towards getting a license, give them information. They've also come up with sandboxes where they are just taking those innovations that are challenging the existing regulation and then testing them in a sandbox is more like it's a lab where we're testing the fintech and the regulator, where they are learning, they are seeing how these innovations are going, and giving the regulator time to think about the regulatory positions that they've taken some time ago, and then go back and rewrite the regulation and come up with new regulation. So to your point, it's no longer just a one side. It's more of a collaboration between the regulators themselves, also coming together with fintechs, wanting to grow with fintechs and innovation that's taking place in the space so that they can shape the new regulation that supports and doesn't stifle innovation in the future.
Thank you. Look forward to coming back to some regulatory conversations. Vinesh, perhaps my question to you is going to be, if we talk about inclusion, we got to act it first, right, ourselves, as we go about our business. What kind of thinking and what is it taking for Visa to think about being an inclusive organization? Because I believe you can't think about creating inclusive solutions when you yourself are not inclusive. What are some of the values and principles that's driving inclusion?
Thank you. I think the first thing just to recognize is that Africa has been recognized as one of the centers for fintech progress, and we have some of the brightest minds and innovative fintechs in the region, right here in sub-Saharan Africa, or Africa as a whole. And when you take some of that mobile technology that's been evolving, you look at the entrepreneurial spirit of African innovators, and then you take what they're doing in sub-Saharan Africa, it's creating really impactful solutions. And as Visa, we want to support that and make it and help them to scale, invest in their solutions, bring Visa technology, and help them to scale at across the region. And when we see really good solutions, we want to make sure those solutions get rolled out across the different markets. And I'll talk about a few solutions. So one is when you look at mobile money, and then you look at mobile wallets. Okay, with the mobile phone, that's just created a solution for previously individuals that were financially excluded. Okay, so now they can get a basic account and start transacting, paying bills, paying each other, but that system can only work in a domestic environment. Once you do a cross-border transaction, then that rail then becomes irrelevant to a certain extent because of regulation and because it's not connected across the different markets. So Visa comes in and says, okay, so how do we enable that? Now, you're probably paying friends and family in a domestic economy, and they say, hey, that's Netflix. I want Netflix, I want Spotify, but I can't use mobile money. So Visa comes in and says, okay, how do we collaborate with, and the mobile networks have been leading this charge quite a bit, and fintechs have been innovating at the back end. So how do we enable a Visa credential into this wallet, and then you can start transacting Netflix, Spotify, and those type of merchants cross-border. And we know there's about 45%, I think, of the population that have smartphones, right? The rest of them have feature phones. So Zeneta, you can dust off that old Motorola because there is solutions for that. So that's something that's happening on mobile wallets. Then when you take, and that's from the buyer side of it, or from the issuing side. Then when you look on the other side and look at the small merchants, I mean, there's 40 million small merchants across sub-Saharan Africa. I think it's a little bit more, but we estimated about 40 million. Now, they wanted to accept digital payments. So I'm just going to take you a little journey very quickly. So I've been in Ivory Coast last week, and we're visiting fintechs and trying to see how do we help them. And one fintech was selling shirts. So Carl said, "You've been to Ivory Coast." I asked, "How? The shirt you're wearing?" Okay. So one of the employees there said, "Okay, his niece is selling shirts. Would you like to buy?" So she came over with a little suitcase full of shirts. So we said, "Okay, we'll take this, but I don't have cash." "No problem. Do you have WhatsApp?" "Yes." "WhatsApp me a link." I click the link, I go online, I make the payment, and she gives me the shirts. Okay, so that's innovation. Okay, and the fintech that's powering that at the back was WebLogy. Okay, WebLogy is a fintech, and they're trying to make different forms of payments. Okay, by innovating on their app, and they have a really good, app experience on their platform. And then when you bring it back into, agriculture, that's the other piece that we're not solving for enough on financial inclusion. So I went back to Ivory Coast, and a CEO and founder, which was a lady that was in Ivory Coast, and they were really solving for financial inclusion. So cocoa farmers previously used to get their produce, it gets weighed, and they get paid cash. And the cash comes like 4 or 5 days later. So the farmer has to go away, long distances, come back, collect the cash. Then they potentially could get robbed, okay? And then the cash is gone. So what they did was they created an ID card. And on that ID card, they embedded a Visa credential. The ID card basically identifies the farmer, where their farm is, what they produce, and a few basic details. They weigh the goods, the money gets pushed directly into the Visa credential, and they can go and purchase. Okay, so that's, again, solving for a real need for these farmers. Yeah?
Thank you very much. For me, one of the things that I see, and I don't know if I'm going to phrase this question properly, but there's a removing of barriers to utilizing different forms of currencies. But what kind of people are taking access to them? So how are people changing in their behavior when it comes to their thinking around cryptocurrency and the various forms of currency? Is there a way to articulate how inclusion is automatic through the currencies we have now?
Yeah, so I think, I mentioned it, I think, when I introduced myself, but money is integral to everything you're talking about is effectively ways of moving money or using money. And in Africa, and I think one of the things that has surprised me in working in this industry is how much utility I'm seeing people get out of this new form of money, which is non-public, public, non-sovereign, non-bank money. There's no offense to the bankers in the room. I know there are a few of you. But it's the first time we've had non-bank money. It's the second time. When you mentioned mobile money, that was the first taste that we got of non-bank money. And crypto is an extension of that, where we make that non-government and public. And what we're seeing in Africa is really difficult to make payments, remittances out of Africa into the rest of the world. It's probably the most expensive remittance channel in the world, is to move money from Africa into the Western economies. It's super expensive, and it shouldn't be. I mean, even, First Rand, the company that I use for from time to time for international payments, FNB, I think it's 40 basis points to move money from FNB to anywhere else. Well, I think they cap it, but it's still going to cost you 500-600 Rand to send a transfer, which is really, from a technical perspective, more difficult than sending a WhatsApp message. And that's got to change, and it's a bit better in other parts of the world. But what we're seeing is people trying to pay their suppliers overseas because they can send money using stablecoins in 30 seconds. And it costs them $5, or they can send it over 3 or 4 days, or it never gets there because there's no intermediary bank that wants to take their payments. So we're seeing tons of that happening, and it's increasing in popularity. We're seeing people save money in stablecoin, in crypto, because they don't have reliable local currency. Maybe their currency is like somewhere like Lebanon or Somalia, where you just have really no access to stability, and you can find that at a globally competitive level by just having access to the internet. Obviously, there's a lot of work to do to on-ramp folks, but I'm seeing a tremendous amount of utility already, and it's changing a lot of people's lives.
Thank you so much, Blake.
Sure.
We have very little time left. I just want to hear perhaps just a quick closing remark from you. Thank you for landing the collaboration and the sharing of information. But a quick remark, what for you perhaps is keeping you awake, and perhaps what is it that you feel rest assured about? So let's go with you quickly, Wiza.
Yeah, on my side, I think I'm very encouraged by the pace of change that is taking place in the regulatory environment across the continent. There's a lot of amazing initiatives in countries like Nigeria, make it super easy for people to sign up. You can put money in a savings wallet that earns you 15% a year, but you can spend from it at any time. It's really amazing, incredible innovations that are coming as a result of progressive regulation. And I'm sure that Keith and his colleagues on the FSCA, they're working on something similar for the market. So it's still very early days. All of you fintech people, Cedric, FNB, blah, 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 all of you only process like 10% of retail transactions on the continent. So there's still a lot of work for us to do.
So much. Thank you so much, Wiza.
So for me, I feel like women are usually overly mentored and underly funded, right? So just write the damn check to female entrepreneurs and get it done. That's all.
To the point. Thank you.
And okay, from obviously from a regulatory perspective, quite excited by the work that fintechs are doing. I think we all know that in most African countries, governments have got the financial inclusion aspect as part of their agenda. And these fintechs, they are coming in and filling in that gap that, the traditional financial systems have not been able to fill in. And we've created almost a suitable regulatory environment that's allowing fintechs to thrive in this environment. So quite excited about that. Thank you.
Thank you so much, and wishing you all the best. Clark, thank you so much. Nadia, all the best to sign the DEM check. Wiza, thank you as well. Blake and Vinesh, let's give them a round of applause. Thank you so much. Yet another amazing conversation on the future of fintech. I'm Zanella Morrison, coming to you from CNBC Africa. Hope to catch you again soon. Thank you.